Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. A lot to discuss today. We have a lot of earnings out from AMD to Google, and then we want to talk about Bitcoin, what that's doing, as well as gold continues to climb higher, maybe with that eyesight on the $3,000 level. But first, let's get into the S&P this morning. Follow me over to the big board, take a look. And what we're really seeing here, folks, is that the markets are trading basically flat to slightly lower, right? So here yesterday, we closed up in this range here. You then had Google reporting / Alphabet reporting earnings. That stock got crushed. AMD got crushed. And we did see the markets trending lower into the 4 o'clock morning time here, right? So really early in the morning, markets were down at their lows. But like we've seen so many times, the markets tend to find those buy the dippers and float off of those lows as we get closer to the U.S. Open. Now, again, we still are flat to negative on the markets, but let's see what happens today on the back of these Google / Alphabet earnings, as well as AMD. Plus, we have to go over a bunch of other ones. Snapchat, Chipotle. I mean, so many companies reporting yesterday after hours, and even this morning, Disney reported, as well as some others. All right. Just jumping quickly to the S&P daily chart, I continue to monitor this bigger trend, right? So we have two lines here. They are not parallel. They are slightly sloping together. So essentially, this would be a long-dated wedge pattern, meaning that it won't meet until way, way far out because those lines are just slowly creeping together. But my expectation is that at some point we break one of the two levels here, right? So the question is here, do we break this one to the downside and get that breakdown, or do we take out the high here, which is a clear double top? I know it's hard to see because I'm zoomed out so far, but basically if you just take the all-time highs, there's a flat line that we've hit now 3 times across the top, and if we were to break that, it then signals the next move up to this line right up there. All right, so again, just little things like that we want to pay attention to give us an idea of where this market is heading. All right, follow me back over here. I want to show you something on the US dollar chart. Now, the U.S. dollar chart, a little while ago, about a week or two ago, I hypothesized we were going to see a head and shoulder pattern formation. All right, let me take a look, because you can see it's actually forming beautifully. Here's your shoulder right here on the U.S. dollar. This is the Dixie, the DXY chart. And then we had this big pop right here, and then look at what we have. So this is a shoulder here. Here's your head, and here's your left shoulder. The idea being is that if this pattern, which is a bearish pattern on the dollar, if it triggers right at the neckline break. So you need to close below this neckline here, which is around 107.25. If that triggers, we then can map out the potential downside target. So let's do that together. Let's bring up our measurement tool. We take the high of the head, we drop a plumb line down to the neckline, and then we take that distance, and from wherever it breaks the neckline, you do a measurement, a measured move to the downside. And in this case, it would take us right here. What's fascinating about this, and what I love about these measured moves, is that they usually coexist with other levels. We can see right here, this little pivot low, that's an exact measured move right down to that level. Now listen, this pattern has not triggered yet, but it is on watch, and it is a bearish pattern on the US dollar. Another chart we have to talk about. So Apple this morning, Apple is taking a beating after basically China came back and said, all right, listen, we're going to investigate your app store. All right, now we've all heard about that going on here in the U.S. and around, the globe, but my point is that don't be fooled here, folks. This is pure and simple retaliation to tariffs. Just a few days ago, the U.S. levied 10% tariffs on China, and miraculously, a couple days later, you now have an investigation into Apple's App Store. It is classic kind of rebuttal here or retaliation. So listen, either way, Apple is lower. If we look at the chart here, we can see Apple is lower on the day. But what I want to show you on this chart is this. We're going to get rid of all of these lines and keep it simple. Well, what do we have on this chart as well? We have a shoulder. We have a head, very clear head, and because of the gap up and move up on earnings, we basically have a very symmetrical shoulder, right shoulder of a head and shoulders pattern. So if we zoom out on this and we do our measurement, this could be just the beginning of a move down in Apple if it breaks this neckline. Take a look at that. We take that measurement. Let's just say it breaks the neckline, which happens to be at 220. And what does that do? It takes us down to about 179, 180 $180 per share, and that would be your downside completion of the Head and Shoulders. And again, listen, at this point, we don't know if it's going to trigger yet, but as a trader, it's my job to start seeing patterns so that if it does trigger, I know exactly what the downside can be and what the target can ultimately take us to. All right, and again, it's important to see the pattern because the pattern is a bearish pattern. Just like on the dollar, it's also bearish on Apple, and it gives me a kind of idea about what could be coming. Again, traders and investors and swing traders that know and look at charts ahead of time, they tend to make a lot more money because they're prepared for moves. They're not caught flat-footed or missing out on key trading opportunities. All right. Let's go into AMD. AMD getting hammered on earnings here. The stock was up quite a bit yesterday, so I think, again, it's not, if you took away yesterday's gains, it's not down so much. Right now, it's trading at around 108. If we go to the daily chart, I am watching this downsloping line right here today. Take a look. If we zoom out, high pivot to high pivot right to here, and this level would be just around 101 to 102. So if we do continue to flush down to that, let's say 101 level, there may be an opportunity there. There's also a secondary level right below at around 93.75. It's not going to, again, pretty confidently I can say it's not going to get to 93.75 today, but again, in the next few days, if it continues to decline, that could be a key target. So somewhere basically between 193, there should be significant support on AMD. Now, Alphabet / Google, I've already annotated my levels here on the chart. Again, you can see here very clearly. In fact, I'll go over to the big board to kind of just talk a little bit about it here. But basically what we have is Alphabet, their cloud area did very, very poorly, well under expectations. That's kind of been one of the keys to Google, right? I mean, we know Google does the advertising and all that other stuff, the search, etc. But the cloud has been where a lot of their growth has come from. Well, that's starting to slow massively. And by the way, that's probably not a good thing for Microsoft as well. But the key being is this stock was trading up into earnings, basically, again, at all-time highs. The stock now is cratering back to about 190 to 191. My key levels here are very simple to see. You take your high pivot here, right here, you draw a straight line. It happens to go through right perfectly at that gap up right there, and that's at 182. So that will be first technical major support. You then have what we call a gap fill in technical analysis, which is basically the close of this day where it opened up this next day. When price tends to fill a gap, it usually bounces. Like, for instance, right here, let's say you had a price here, it gaps up here, and then goes like this, but when it comes down to this line here, it tends to bounce, at least probability-wise, that's what happens. So the idea is if it did come down here, it would hit and then bounce back there. Now, do we know if it's going to go back to all-time highs? No, and I'm not going to pretend to. The idea is we're looking for shorter-term moves where we know or can at least predict probability-wise it's a good chance of major technical support. All right, so that's your Google chart / Alphabet. I always call it Google. I apologize. I know it's Alphabet, but to me, before they changed the name, I traded for 15 years, 20 years, whatever, and it was always that. All right, taking a look at Uber. Uber dropping on earnings this morning. This stock, again, is trading lower. It's not a huge drop, so I think we have to just keep it in perspective. Yeah, it's down at around 65.5. It looks big. That's only about a $5 move, not even 10%. But if we look at this here, the big levels, there's two levels I'll be watching here. Number one, we have this level just at a pierce of 60, and then this one right below here at 55. And right in between, there's a secondary one at 59, basically below 59. So those would be your two levels. This one you can kind of combine. So I would say anything between 59.50 and 58.75. Major support. Now, the fact that these two lines are so close, that should be a very good tradable level today. And then if it gets through there, the 55 level will be next. Yesterday after hours, by the way, I'm not going to spend a lot of time here, but Chipotle reported earnings. You can see it dropped initially, is down, really it's only down a couple dollars. And Snapchat initially popped on earnings and then has come back in and is basically flat. Because neither of those have massive moves, just keep in mind, as a trader, if it doesn't have a big move that's abnormal to the stock, meaning that it's outsized, created by emotional responses, a good trader is going to use investors who are reacting emotionally, which gets priced to be outside of where it should be. That's our ability to now think logically and use the charts to predict where common sense kind of comes back into reality. And that goes for stocks that go into the stratosphere as well as ones that go into the basement, right? Okay, so just flipping back here this morning, we did have Disney reporting earnings. The stock initially popping, then selling off. Now it's moving back up. But same thing. Again, yesterday closing, looks like it closed yesterday around 113. It's trading at 115. A $2 move on Disney is nothing to write home about. So again, it's not going to get me out of bed in terms of a trade. Just to look at a couple levels on Disney, 123.75. That would be a big double top right up there. And then needless to say, if it drops to 102.60, that would be a huge level. It's not close to either of those. So again, I'm going to leave this be for the time being. Now, one stock that's getting absolutely annihilated here is FMC. This is an agricultural chemical stock. It's not a very common one that we talk about, but it is down well over 25% right now in the pre-market. And so what I do is I say, okay, it's trading at 30, basically 38 and change. Where could be a technical level? We have to zoom way out to go back to this level. And basically what we're going to find here is that there's starting to be some support around 37 or so. So 37, give or take. I know it's hard to see here, but there's this little pivot top right in here. Right around 37, give or take. And that, to me, would be a level that I will keep an eye on. But keep in mind, a stock that is down 25% on the day, it's not like Google that's down 7%, right? Google, in general, you know, it would take a catastrophe for that to go down 20 or 25%. It would probably crash the markets, right? So the idea is when you're dealing with these stocks that move in bigger ranges, 25, 30, 35, 40%, if I'm going to trade it, and I can only speak for myself here, then I go much smaller on the share size because it's much riskier. So every trader, every investor, we must analyze the risk prior to getting into a trade. If you analyze the risk after you get in the trade, you're probably screwing yourself because you're going to be doing way too heavy share size in general because our greed and our emotion just like, oh, we're going to make so much money, let's go all in. Instead, we analyze ahead of time and say, wow, this is down 25%. It could go down as much as 35% on the day, maybe 40. So I want to start small. If it bounces, it's going to give me a good bounce anyways. I'll make some good money, but I would go much smaller in dollar amounts versus a Google trade or an Alphabet trade because Alphabet doesn't have that same risk that it could be down 30 or 40%. These little tidbits, it's all stuff that a good trader thinks about prior, right? So right away when I saw this, it's like, okay, this could be something I trade today, but it's riskier than something like Google if I trade Google. So my share size or dollar commitment to it must be lower in terms of risk. All right, let's jump over here real quick. Bitcoin, I'm not even going to go to the big board for this because there's just not much to discuss. It's still trading right between our key resistance up here, 108 to about 111,000, and support at 92,000. So again, nothing new there. Gold continues to grind higher. Take a look at this, guys. Gold again just continuing to rally higher. Notice the parallel channel. It's looking more and more like this may want to get up to this upper level right here. That will be epic resistance, though. That would be a level that if we look here, it pulled back, right? And then here, it had a big pullback. So we can do as technical traders is say, okay, if price does rally into this level, which is around 29.75 to 3,000, you should get a serious pullback, maybe even as low as the lower end of the channel, right? And we can take this away here. But what we can see here on the chart is that when it hit up here, it basically within a week almost pulled down to the lower end of that channel. Now, it doesn't mean that that's going to happen this time, but we can assume it at least will have a solid pullback off of that level should it run straight up into that upper trend line. And here you can see it basically did that, right? It had a little bit more chop right in here, but essentially from here to here, it was almost a straight move up. From here, is it going to run into there? We'll see. But I do think you get a big pullback at the 3,000 level, some profit taking most likely. And then ultimately, I still think gold goes higher overall. Let's take a look at silver real quick. Silver's still struggling at my major target that I revealed yesterday. Let's watch to see, does a bull flag form here? Or in which case you start to look for another breakout, or does it get rejected and come back down into this level as well? And then if we just flip over to oil real quick, oil retracing after the bounce yesterday. As I told you guys, I moved out of my short on oil here with members of Smart Money, Commodities and Miners. So we took the rest of our gains right here, and now I'm just going to wait. I'm just going to sit on the sidelines like I've been doing with natural gas for a little while and just waiting to see. Speaking of natural gas, it's doing almost nothing today. So again, it's a wait and see on this. Now, for me, I start thinking ahead. I say, okay, well, is this potentially making like a bearish pattern here, in which case price could chop and come right up into this area? That would be a short. If it does that, I might take a trade. Aside from that, it would have to fall, like I've said before, down to 260 or so to get me thinking about a long trade. All right, so listen, when all is said and done, folks, we have a market here with many stocks that are making big moves. The overall stock market appears to be a little quieter. Generally, the tech stocks are down, so the NASDAQ is weaker. But remember, the NASDAQ was stronger yesterday, so it's almost just mitigating that. It was strong yesterday while the S&P and the Dow were weak. Today, we'll see if the Dow and the S&P are a little stronger, and the NASDAQ is weak. But with Google/Alphabet and AMD underperforming, that's a likely scenario. The bigger question for me is that bigger channel, or I should say wedge pattern on the S&P. Are we going to attack the lower trend line, or are we going to attack that double top, and which way does this market ultimately go? But right now we're in a holding pattern. We have to be patient as overall technicians of the charts to see the next bigger move. Keep an eye on that head and shoulders on both Apple and the US dollar, and we'll go from there. All right, guys, I will talk to you a bit later. Thank you so much for tuning in. I'm going to get to my Apex Live day trading room and make some money there. I hope to see you there as well. You guys have a good one. Take care.